Okay, guys, Sam back with you here on Thursday, October 25th. And also by request today is look at the pound to the yen. So this is also another, just a very good example of how we can combine what we normally focus on here, which is the Elliott Wave methodology, and we can incorporate some Gann technique here that we've been reviewing. As I mentioned in the last video, the idea being, for those of you that are struggling with the complexities of Elliott Wave, and you know, it's right, as I will try to remind people, right? It's not mandatory. It is definitely helpful. I use it, right? I can't help but see it. But if you are struggling with it, this is the Gann methodology that we've been studying, and I'm going to demonstrate here is very effective on currencies, where it was taught to me originally was on currencies. So I'm going to show you some of those techniques and how we can combine them. All right. So first up here, so here's an 8-hour on the pound yen. Right, somewhat of an exotic, but it's very active, and it trades incredibly technically. So like just you know, as I like to say, when Elliott is most useful is when it's so obvious you can't miss it. Like there's just no way for, well, if you've been trained in Elliott Wave, it's hard not to see that, right? It's hard not to see if there's a completed 5-wave structure. So we've got an impulse. After the impulse, right now, all we're doing is correcting that. Now we know that the highest probability zone for that correction, if we've got a completed 5-wave structure, is going to be the 50%. But also, a very common retracement zone would be the prior 3-4. So we see here if that 3-4 is right, so we get a toe into that. Now, if we think about a full 50%, and I have this set to our wolf range that I use here. So this is the 50. So we've yet to make the 50. But so, you know, we're not in that high probability zone. Now we don't have to get there. Right? We don't have to. If I go off of this pivot, then now we're right there, right? So you're going to look at that and go, shit, you know, that's one of those things. Are you fudging that just because, well, I noticed that's at the 50? Well, it's, you know, it's not insignificant. We know an algo is much more likely to use the dominant pivot. So, but if we come down here, it's always worth to check these. I'd check all of them. I'd check this too. Right, so this stands out. So from that, there's almost a perfect 50. But this is, what I'm demonstrating here is, I call it the wolf range because that's how it was taught to me, and that's the guy who taught it to me. All right, so let me just give you the idea here. So we've got a clean 5. But before I get into that, I just wanted to mention this as well. So what a great example of how a market trends. So as we see, if this is some sort of a correction that's complete now, and it's reasonable to think that we've got some sort of a correction that's complete and we're going to be shy of the 50, we certainly have a full-featured correction here. So we can get an A, we get a 3-wave B, and it looks like we finish with a diagonal here. So we get an ending diagonal. And if you, well, hang on a sec. Here, we can, just pretty obvious. We can see here how this, as we broke that, so whether we were drawing it as a channel or, come here, where's my, I thought you were hot here, something like this, right? So we see that. So very, very clear text. So 1, 2, 3, 4, 5. So we complete that, right? So it's right. So that may be one of those instances where people are going, shit, man, I don't know, how does this diagonal thing work? Right? Like as I try to say, it's not essential. What is essential is this concept of swing retrace, or as it's often described as swing rotation and then continuation. But here's what I wanted to focus on. Look as we go through this, how we have a continued series of higher highs, right? Higher highs. Then as we turn down, now we get a lower high. Lower low, lower high. Now this here is somewhat interesting because it's the first, as we've gone through this series here, it's the first time we get a higher high. Now potentially, just that, potentially this is setting up here as the first lower high, if that's going to hold. Well, that remains to be seen if that's going to hold. And now we are on an 8-hour chart here, but I just wanted to give you that. It's such a good visual here. So here's the first low. This is slightly higher low, higher low, higher low. All right, so that we continue and then we start down. So just, you know, it's chart reading 101. Well, how do we define a trend? Series of higher highs, higher lows, right? How do we define a downtrend? Lower lows, lower highs. So pretty basic stuff here. All right, so let me get that off here. Let me just get rid of everything. All right, so everything's off. All right, so let me focus a little bit on re-emphasize. In fact, I think we used this. It was such a good example in some of the GAN training that I just did. So this whole idea of ranging the market. Now, this is important to understand. So as we first start from this pivot down here, the first little squiggle I get is right here. So that's the first thing I've got. So if I'm trying to get the range of the market, do I have the range? Well, here's the 50. Here's my negative 200. Since I've got this little reaction at the 50, I would pull lower and see how we're looking here. So I'd get that. That's my first little swing. Am I get it right on there? There we go. Okay, so here's my swing. Here's my 50. Here's the 100. Now note this here as we let's just put little boxes here. So here's the 100. Maybe that's going to be annoying. I'll just do it this way. So we get a little pause. I don't know if you can barely see this. We get that big spike here at the negative 200. Then we keep going. Now another reaction at the 300. So Gann's idea was that the market tends to respond to these harmonically. So we ping pong from one to the next. Now we've gone. This is 300% that initial range, and it looks like we'd have to go to the 350 to carry that on. But note how we continue to ping pong on these. So if I were to carry forward and go to this little pivot here, do I have the range? Right? As I just showed you, if we go all the way, down here, we've yet to do the 50. So now I've got the full range. If we're going to come back, that's the first thing we'd look for. So in any retracement, the 50 was the key number to Gann. So right, just like as we look at it for our algorithm play, that 50 is an important number. So do I have the range of the market here? Well, there's a few other things that we might look at, but certainly, I mean, we're talking about 15 to, what would we make that low? So that's about a 2-year trend heading down, right? So we go from the larger time frame here on the 8-hour to smaller time frame. But I always want to make a point of emphasizing to you how important it is to look at the longer term when you're trading FX. That's where the money is made, is catching some of these long-term trends. So let's go from that 8-hour. This is the last one we used here. So let's go from that 8-hour down. We'll focus over here on the hard right edge. I just want to make a few points there. All right, so let's go from the 8-hour to the 2-hour. So I'm guessing people are interested in what we have here. So we'll get to the hard right edge. But always a good idea to see how the market is trading and if it's trading technically. So here, when you have here at a 2-hour and we have these giant swings, we know there's very high probability that these swings are going to be related mathematically. So same concept here. I'm trying to get my range of the market. So I'm going to use the retracement tool. I've got it set to my wolf range. So when I first start here from this pivot, I don't have any data in the past. I don't have forward data. I only have prior data. So when we start this, we go from the pivot high. The first thing I've got to work with is where it came from. Right, so this little pivot here, that's where we came from before we got that top. Now, as I look here, how do I have the range of the market? Well, we get here's the 100. That's the key one we're looking through. We go to the negative 150 to the tick. So once I get past that pivot here, right? Well, this is one I would keep an eye on. But as we get past that pivot, now I'm going to go to the first new low that I get here. All right, do I have the range? Starting to look better. So here's 100% of the range, or pardon me, here's the range. Here's 50% of the range, 100% of the range, 150, 200. So I'm getting tighter. I'm getting better response. So again, if you think about the way Gann looked at this, the idea was we move harmonically through these. We tap them, pause. If we get through them, we go to the next, pause, to it again, back to it, back to the negative 100. Now we're back to the 50. So that range is starting to look pretty good, right? So that's the kind of thing you might, keep on your chart, or if you had a quadrant here, having the longer term range, so you're looking for reactions at these levels. Now you can keep that going, right? Market keeps going, all right? This is over a long period of time. Do I have the range? Well, let's keep this going. Let's see. Here, do I have the range? Not as good here. How about if I do the whole thing? Well, if I get the whole range of it, so going swing high to swing low, what's important here in the middle, if I get right on there, okay, what's important to me is the 50, all right? So I'm ranging the market. Well, if I want to get an additional range, I can just do the same thing here and split this in half. This is why I like to do it this way. So I can grab this range here. So I'm just going from here to to the low, so I get the exact same effect and split it in half. Do I have the range? All right, well, what do we got right here? So you see what I'm doing? All I'm doing is just I'm dividing things in halves, right? So I could do the same thing again and divide this in half. So if, I mean, just to demonstrate here, so if I grab this and go here, right? So now I get that same concept here. I'm trying to range the market. So here's my new range, right? So relative to this range that seems to be influencing the market. Right, so that's the thinking here. So as we sit here just tagging that 50, do you see what we're doing is we've ranged the market. Now we're cutting that range in half and we're getting a reaction here. So if we're coming back this way, if I look here, right, we're not going to be right on it, but here's the first range of the market right here. Well, I guess you make a case we had it here, but the first dominant here is right here. Okay, so here's the range. Here's the, well, I'm probably confusing you here. Here's the range. Here's 100%. Here's the 150. Now it looks like we'd have to add that. So if I take the new range here, yeah, let's see. Let's do it this way. Splitting that range. So I've got a cluster here. As we're coming down, this looks like this is the dominant. So a little bit of trial and error here to see what fits best. So I think I still like this better. So let's go back here. So as we've hit this range, hitting that 50, right, coming just through it. Well, we can, now we're on a 2 hour here. We can start to, let's see, I just want this right here. Sorry, guys. That's what I'm after right there. So there's my split of that range. So I have one range and then I'm dividing that range in half, right? And we're sitting at the 50 of that range. Well, there's a few other things that I can look at here in terms of where we might be going next. So obvious, how are we relating from swing low to swing high? Now, the 50 of this range being split seems to be affecting the market, but that's not enough by itself. So I'd want to look for some other indicators. So I'm going to open this up as we're coming down here. Is there anything useful for me in here? Well, so looking at that, so here's a fairly good example. You got an Elliott count in there? Right? I mean, could you get one? Yeah. Does it matter? I mean, right, again, as I'll try to remind you, when is Elliott most effective? When it's so obvious you can't miss it. So yes, we have these series of swings. We have good rotation coming down here. But an Elliott count here is, again, is often the problem with Elliott. You know, you put 10 Elliottians in a room, you're going to come up with 10 different counts on this. But what I can do is I can try and range the market here. So I can take this pivot here, come down here. Do I have the range in the market? Well, isn't that interesting? So as I take my full range here, here's 100% of the range. Right? You see, here's the first swing low. Here's the 50. Right? So here's my range. Here's minus 150. Here's minus 100. So we are at exactly double. So we get confluence of the range here. So do you see what I get here? I get a very tight little confluence zone where I'm taking the range, the prior range that we looked at, the prior range, and then I'm looking at this range here, doubling it down. We've come right to it. Now, that doesn't necessarily mean that that's the pivot. That's where we're going to hold. I might do a few other things here to look, but I've got a point of interest. How about we say it that way? It's a point of interest as to where I might anticipate a reaction. So having said that, now if we go down even to a lower time frame, let's go down to the 30 minutes, see how that looks. All right, we're starting to look better here. So I've got some swing relationships here as I come down here that I can start working with. Well, again, we could do some more ranging, but I like where we are down here. So I think we look fairly good here, and these levels become potential bounce points or harmonic points where we might look for the market to react. So are there additional confluence points down here that we can look at? Well, we can start using some of Gann's alternate price projections, which are very, very similar to Elliott's work. So a couple of things we can do. So first we take swing low to swing high, right? So Gann's were the 62, the 100, and the 1625. So we're not quite spot on here. So if I go lower, let's take the next swing. All right, so that's a little more interesting. So if I pull back one here, that's nailing it. This here is the 100. So I take the length of this swing projected from this, looking for a reaction at the 100. And if I scroll down I've got another potential pivot. So if we're going to break this, next area where we'd look for a reaction, if we're going to continue down, would be the 162. And then I could continue, I could do the same thing. So I can go here. So we've got multiple swings to look for relationships, swing high, swing low, projecting down. Here's the 100. So I've got a second confluence zone here as I'm getting multiple 625s down here, right? So Gann used the 625. We know the key fib number is 1618. So the 1625 essentially would be on top of each other. But you could do the same thing again. So again, we're looking for confluence points. And so we continue to get this swing retrace. Get that right on there. Okay, so here now we get a little more confluence here. Here's the 100 of that last swing, adding confluence to this double bottom that we've had down here. So if it's going to keep going, we've got these continual levels where we're looking for reaction. Now here, we've already got the larger term range. I could continue to try and range that market, looking for range expansion. So I mean, you could do it right here, just looking here. Right, so there's the first move. So if I get right on the edge here, here's 100. Here would be my negative 100. So here's my 150. Is that the range, or have I gone too far? Right? Is it right here? All right, so here, the first pivot I have as we move off of that before I get my first retracement, here's my 100. Here's my negative 200. So I'm adding confluence here to this area. That's probably hard to see. So it would be, here's the first pivot. Now I'm taking that range. Now down, here's 100% of that range. Pardon me, here's 100%. We get that first reaction. So if we stay on that angle, here's the 1625. Right, so we've got the 100, negative 200, 100 right on top of each other, and then we've got the negative 300 way down here. So I'm just trying to give you some new things to work with here. So again, easily we could put a nice little channel on this and say, oh, looks like, so we've had a little throw over of that channel. We might put some median lines on it. So some of these, I know that gets a little hard to see. I try to put the background on there to differentiate. We can take some of that off between the Gann and the Elliott, but maybe that's just making it too hard to see. So let me pull some of this background off. All right, so yeah, there's a cluster of lines, right? Put enough lines up, something's going to hit. But I'm trying to just give you guys the broader picture here of how we can use the swing relationships without being concerned necessarily about, is that a 1-2, 1-2, 1? Just trying to simplify. So let me start all of that. So let me get rid of all of that, right? So just sitting here right now, what have I got? I got a double bottom that's at a 50 in the range. So what's the play? Well, you're trying to pick the turn here. So talk about a series of lower highs, lower high, lower high, lower low, right? So on this scale here on the 30-minute, let's go up to a 1 hour. There's certainly that would be high risk to be a buyer there, right? It's fairly high degree of risk after this continued series of lower highs. First, particularly here on a 60-minute, let's get a higher low and a higher high. Until we get that, right? I mean, you're trying to pick the falling knife, right? Which can be dangerous. The one other thing, if we go back out to our, let's go to a 4 hour and look at this. All right, so since we have this nice ranging factor here, so we're just continued this series of lower lows, lower highs. So of course we could, if we just use our traditional here, if we look for if we go back to our traditional, what we normally would look at, which is our measured move, we know we've got the golden zone sitting down here. So that's something to be paying attention to. So we have that pattern that we know the algos like, where we get this rotation. So we get 1, 2, 3. They love the reaction off of that. So this is a reaction zone. This is a reaction zone. So as we're through the 50, anticipate a reaction here at the golden zone. That's certainly something we can look at as a qualifier to whether or not we have a new trend. Do we hold? Because right now the trend is just going straight down. This is the only thing that's of interest, because as we came out of this series of lower highs, this is the first higher high we get. Now, do we hold here and get a technical pivot that would set us up for a higher low that would take us there? right? Do we get that higher low? Well, right now, right, I would. So again, why try and pick the turn? It's high risk. So instead of trying to get that, look for the reaction and then take the first 50 off of that, right? So then you can be much more precise about where you're out. So if you're buying it here, we're out underneath the 65. So you're reducing that level of risk rather than trying to catch the turn. Just a suggestion. Right? So, and if we were to get that pivot, then of course immediately we could start drawing up a set of median lines. Now I've got a modifier on there. So let me go back to original. So if we get that, that's the first thing I would do. So we've got a potential golden corner pocket setting up if we're going to come down here, right, which looks like very reasonable that we might. So if we get that, you might look for the reaction. Now, the other thought is to take a smaller bite here as the stop under the 65 gives you a relatively small risk on that trade, and then use the first pullback, assuming you get the turn there, get the first pullback. If we come to the lower parallel, that would be a chance to add, right? So you're adding with a little house money. Stop remains the same, but now you've got some profit. Now you've given back a little bit of profit, but you're averaging in for a better price, looking for that reaction to take us towards the median line, right? It's not likely to go straight up, so there may be additional spots where you can add. Now, if we get beyond that, then we start looking at modifiers. All right, so just some different ways to approach the market to try and reduce some of the complexity of Elliott Wave. That is definitely the next zone that I'd be looking for a reaction, so I'd pay attention there. So a little alert on this, not a bad idea. And then the other thing I thought might be worthwhile, if I can pull out on this. Can I do it here on a 4-hour? Yeah, we can. Okay, so let's stay consistent with how we're looking for that relationship between traditional Elliott and Gann. So if we're looking, so this is a perfect spot to put a Gann fan on. So we've got a potential pivot here. As we think back to our larger degree, that was our pivot that looked like it was correcting that 5-wave sequence down. So if we could put a Gann fan on that, so the first thing we got to do is lock the scale. So we lock that scale. Then I'll come over here and get my angle. All right, we'll go from this pivot. You got to get right on it. Look for our 45. And then we'll grab a Gann fan. Yeah, come here. Yeah, did I do that? I did. All right, so when you hit auto, you got to relock. All right, so that's what I wanted to do. So there's my 45. Red line's got to be right on it. Okay, so now if we think about our ranging tool, or our measured move, in terms of where we might be going, this zone here is going to be very important to us. So coming back down, note what's happening here. All right, so this is our 1 by 1. This is the key line. So note we tap, we get some wicks through it, tap again. Now we're revisiting. Now that's so perfect setup, right? So look here. Very often you'll see if these lines are broken, they're retested. So we have a potentially just a perfect confluence zone down here for a reaction, right? So if we get that reaction, we know it's technical. We know an algorithm is likely behind it, right? We've got a dominant swing on a 4-hour chart to a swing high. We get that right on it. We're coming back to visit our 1 by 1 line. So we've got just an ideal location for a trade entry there. Now, as soon as that gets on, now, of course, here's the other thing you could do, right? So we could go from here and look for confluence between these. So if I get my 45 coming back this way, come here. There we go. So we get a 45 going that way. Get my Gann fan coming back this way. Got to be right on it. Can get right on it. Well, on that, give me 1 second. It's worth doing this because you got to get right on it. So you see I'm just a tad off. All right, so then that affects this. Come here. This can be where the, sorry guys, this can be where the magnet can be helpful. All right, so it looks like it's kind of a pain in the ass, actually, but you got to do it. So let's get right on it. Okay, there we go. So now we can zoom back out. We got it right on that. Okay, so do you see that intersection? So we fatten this area up because it may not hit it right as we're drawing this. So there is just a textbook perfect technical confluence point, right? So here would be, here's your target. Right? If we're going to get the algo participation off of that, here's the target up here. Right, do you see how that would work? So we're going to bump into some resistance here, of course. If we're going swing high to swing low, we're going to bump into resistance. But here's the algo target up here if it can get all the way through that. Right, but I would likely be looking for a reaction here if we come back to challenge these highs. That would be a place to look for at least some partial profit if you get the pivot here. So just kind of trying to give you some new ways to look at the market and kind of keep you from getting caught up in the Elliott wave. If that's problematic for you, here's a simpler way to approach the market using some of the GAN training that we just done. Now I know that I'm moving through that quickly and there's gonna be a lot of questions. Right? Members, you have all the GAN trading videos that you can refer to. If you're on YouTube, well, maybe a good reason to join us so you can get access to all that training. I think you'll find it will be incredibly powerful and probably blow your mind because there's some things that are just, they literally are hard to believe. All right, so with that, I will wrap it, guys. That's kind of, I got a bit long-winded here. Sorry for the detail on this, but I just want to show you how important those are and then looking for those areas of confluence. That's the whole name of the game. Ranging the market, then looking for confluence points. All right, guys, with that, I'll wrap it. As always, you can learn more about what we're offering on our website. Follow us on Twitter. Keep you up to date here on YouTube as well. Okay, guys, see you later.